Hey traders, haven't done this in a while. Let's look at Apple ahead of the week where all the mega caps report earnings. So everything I say here is binary. What does that mean? I'm going to report on this chart as if there are no earnings, but you should know that starting Wednesday morning, Tuesday night, that's when the big guys start reporting. Google and Microsoft, I believe, first, and then there's Meta, and then on Thursday night, it will be Apple and Amazon. So Friday's open on Apple is a coin flip. However, I think it'll move in sympathy with the other earnings. I want you to know that the reaction to the earnings, just the reaction on the open, is binary. It does not depend on how good the report is. It's all about what expectations we humans have in what we want to see. I promise. You can look back on Apple. It has had way more red reaction to its earnings, whereas its earnings are phenomenal. It hasn't delivered a bad report in years. Yet, if you look back, like 8, maybe 6 of them were down and 2 up. That's ridiculously low, right? So it's not about the quality of the report. All right, so first, zoom out to this picture. Oh, by the way, if you do like this video, please give it a like and subscribe to this channel. We rebranded it and put the little bell that tell you that I released videos. Okay, so this is a weekly chart. Every candle is 1 week. And I clearly can see that the pandemic is down here and we're still all the way up here. So Apple does not have any problems. And if the markets crash, then Apple is has a lot to give back. If the markets crash, Apple is not likely to crash all by itself. Also, it's holding up better to its own June lows than the market in general. The market fell below the June lows. Apple has not. This is also a level to note, 134. That was the free cap moment where I was online with my 300 or so people, and I said, this is a moment where you would buy the stock. And within minutes, the stock was up in the 40s, and they made a lot of money if somebody did that. So trading in a group is way more fun and way less dangerous and way more fruitful. I know it because I do it 9 hours, actually 9 hours and a half every day, where I share my screen like you're watching right now and I'm speaking. 300 people plus or minus 20. It's very fruitful. Let's zoom in. So the big picture is we have some room. We have some support immediately from 2 weeks ago and from June. And we have a whole zone with many more little supports in case we need it. Let's go down to 1 day. The 1 day tells you that it's seesawing around the middle zone somewhere around here, correct? So if that's around the middle zone, we're below the middle zone, we're at odds. So as we rally, we're going to find sellers. Where? Somewhere around the 152.5. And I'll tell you more why. Let's drill down. Let's go to 2-hour chart. And now we're starting to see why. If you look left, this was a spot that they have failed to recover. They used it as support, they lost it, and they failed to recover it, and we're going back into it. So 150 to 155 is going to be difficult. There's going to be hidden sellers. The good thing is that we are making headway, higher lows, but it has happened before. It happened before. They sold rallies all the way down to here. Maybe this one is different. So we'll go down to an hour, and now it's becoming more easier to see the bifurcation. Look, pretty sharp spike and fail. Now, I can tell you that today is Sunday night and the futures are open and they're up about 0.8% last I checked. So Apple is going to be up tomorrow fighting with these levels. Now, notice, let me see here if I go to 30 minutes. So 1 hour, I want you to see the volume discrepancy here. Okay, so if you notice here, Apple coming up to here, it's going to fight with a lot of volume up there, 155 through 158. So there is going to be, everybody loves it, closer to 160. So if it gets there, it's going to find congestion. Maybe it filled this gap and stalls. So maybe Apple rallies with Google's earnings and hits 160 and stalls. I wouldn't get long going into that. I would rather make money off of the reaction to the Apple's earnings, trying to take money out of people who overreact on the earning. I almost say, hey, I wish you fall. I don't really. So I can take advantage of those people who panic out of it. At this point, I would prefer to buy dips in Apple if they come, and it should have support through 140 or 142. Now, I can tell you the whole market is going into a prior fail, especially in the NASDAQ, so we could find some sellers. If not, there's more upside to this rally. Don't short the rally because you believe that we're in a recession. It's ridiculous. A recession on Main Street is not a recession on Wall Street. In fact, Wall Street has been in a recession for months. The stock market fell below 20%, and that's the definition of a recession on the market. Don't confuse the two. Don't trade fundamentals of the economy on single stocks. You will make mistakes. Now, if you want more granular, you get to 15 minutes and you start seeing better levels. You see individual levels. That's what we do all day. I can give you an advice here to not trade alone. If you have the opportunity to join a group, join it. Mine, you can reach out. I can get you into mine. We have about 300 people. They're there all day, every day. So we do good things in there. If you're an active trader, or if you just want to learn a few things and read 2 write-ups a day, if you're not an active trader, you have access to a chat room on the side, reach out. I can help you with that. We do this all day, and it's a lot of fun. We're not from Wall Street. We're not anti-Wall Street, but we just don't talk their lingo, and we know all about them, and we have ways to beat them. All right, so hopefully you had fun with this. Just remember, the reaction to the earnings has a lot to do with the expectations. People are like programmed to say, where's the headline? They missed estimates. They don't even know what they're saying. They're missed estimates. Who gives a shit about the estimates? Tell me how the company is doing relative to last year and last quarter. Don't care about somebody's opinion about it. So be smarter than that. See if the reaction down is on an estimate miss, and then look into the actual numbers. If they're good and the message is good from the company itself, yeah, you can give the estimate person the finger and move on and take their money. All right, this was a fun way of saying we have all the information. We don't need some people's estimates to trade it. All right, later.